Aloha. Hey, it's Julie Ziemelis, 365 Hawaii with Real Broker, and you are watching the October All Island Real Estate Market with a mortgage report too. So we've got Travis Green from Guild Mortgage, we've got Lance Owens from LUVA Real Estate, we've got Nui from Real Broker, Eric from Real Broker, and new today, Jana Mahoney, Real Broker.
Hi, aloha.
No, yes, so we got so
Oh,
Good to see
yay.
everybody. I haven't seen a couple of faces for a while. That's awesome.
What we're going to do is we are going to start with the money, which is Travis, and then we're going to go to Nui in East Hawaii, and then Lance and Eric with West Hawaii neighborhoods, and then Jana with North Kahala and South Kahala. So, Travis, I'm putting you in the spotlight. Go for it.
Thanks, Julie. So Travis Green, Guild Mortgage. Well, the story lately has just been that interest rates are at their lowest point that they've been for the year, and kind of the big driver behind this mechanically has been the 10-year Treasury has closed multiple days under 4. So I'm just looking today, the 10-year Treasury closed like 3.991. This is significant because we've been around like 4.25, 4.3, 4.4 for like 2 solid years. And so the 10-year Treasury making this move below 4 has sustained improvement in interest rates, long-term interest rates, kind of across different product offerings, right? So conventional's better, government's better, and then our even portfolio products are better. And so lots of improvement in interest rates. Mortgage News Daily today, which is, we're recording this October 23rd, has the average 30-year fixed rate in the United States today at about 6.125. And so again, that's a data set of a lot of different lenders, a lot of different scenarios. Some of those have points, some of them don't. Some are going to be above or below that, but on average, it's coming out about 6.125. That does track with what I'm seeing. I am like literally as we were starting this recording, before you put me in the spotlight, I just fired off a quote to somebody at 599.
Oh, there we go.
Ooh.
Conventional purchase. I have locked VA refis in the mid fives this week, and it's nice because it's just nice. It's a nice change. And so, the government has been shut down now for I don't know what, 23 days, 24 days, something like that. It's been a while. And so we haven't gotten jobs numbers, which is disappointing because that is information we all want to know. But tomorrow we are going to get CPI, apparently, Consumer Price Index. That's going to come out. So that's going to be very closely watched. It is expected to increase from the previous month. And then next week, October 28th and 29th is the next Fed meeting. And so that's also going to be closely watched. Bond market fully expects that the Fed will cut an additional 0.25% or 25 basis points at this coming meeting. But again, more closely, they'll be paying attention to what Jerome Powell has to say after the meeting when he goes up to the mics and takes questions from the financial press. Last time, at the last Fed meeting in September, mortgage rates improved ahead of that meeting, and they actually got a little bit worse after the meeting, even though the anticipated rate cut happened. Jerome Powell's tone was much more cautious than the market was hoping for. So he referred to the interest rate cut that they did as, what did he call it? Was it a kind of precautionary? And the market did not like that. They wanted him to be like, inflation is defeated and we have a weakening job market, so we must act quickly to rescue the American borrower. And that's not what he said. He said that it's a mixed bag right now, and we're still worried about inflation, and we do also have concerns about the labor market. So see what he has to say tomorrow, next week. But overall, again, broadly, mortgage rates are better. We're kind of at the lower end of the range for where Fannie Mae and the Mortgage Bankers Associations, all these fancy economists at these places have predicted that they would be at the end of the year. So I'll take it. They don't predict a whole lot of movement over the next year or two. And so if we can settle into this or even a little bit lower, hopefully, and stay there and have it sustained and not be herky jerky, I think that everybody would appreciate that.
Right. Yes. We'd have a little bit more confidence with the buyers who decide if they think they're going to get a better deal, they're going to wait. Right.
Yeah. Yeah. I mean, another thing, I'll just say this. I was looking at a adjustable rates, which are pretty attractive in some cases now, especially on the longer fixed terms where the rate's fixed for 7 or 10 years. I was looking at one today where for a particular situation, every single rate quoted on this 10-year adjustable rate mortgage was in the fives, from like 5.75 down to 5% flat for a 10-year fixed, fixing the rate for 10 years on an adjustable 30-year mortgage. So
how many 10 years do you actually sell?
Some
actually do that?
How long do people usually own a house? 7, 8, 9?
Yeah, but
right?
they take 30-year fixed mortgages out.
Yeah. And so I've definitely sold some of these. I've had people choose these 10 years. I don't get paid more for them. But yeah, I mean, if you can save a half a point and you're borrowing $900,000, it's a big difference.
Yeah. Yeah. That's cool. Okay. That's a good strategy. I like that.
Yeah. So I'm Mr. Optimism today. I have nothing.
I like that. A little peppy steppy over there.
Yeah.
Okay. Anything else you want to share with people? Tell them to get their pre-qualifications in, pre-approval. You can do pre-approvals. Boom, boom.
Yeah. Get your pre-approval in. I feel it picking up. I've been swamped all week, and which is great. But yeah, get your documents together, get your pre-approval in order. And again, if we're talking about things like temporary buy downs or permanent buy downs, especially if it's seller funded, we're in kind of a new category of interest rates for where that's going to get us now. We're not getting people bought down to 6.375. We're getting people bought down to 5.75. Right. So it's meaningfully different from where we were, for the last couple of years. And so hopefully we can sustain it. But I would just get the word out to buyers that don't wait for the Fed. Do not wait for the Fed. Just if you need a house and you want to buy a house and you can afford it, don't wait.
There you go. Good. I like that. Okay. Okay. Let's see. Who goes next? That would be Nui. Let's see. Okay. Let's see what's happening in East Hawaiʻi.
Hi, everybody. Okay, so we'll start in South Hilo. I pulled these at the beginning of last week when me and Julie met. So I'll just go over the active stats. As of October 13th, there were 95 active in South Hilo, 29 contingent, and 23 sold properties. The median list or the median sales price, I can't spit it out, last month was $675,000, last month being September. And then in Hilo, you're looking at about 2% off the most recent list price. So this is after if there were any price reductions, that's what you're kind of looking at, about 2% off of the list price. Average days on market was up last month to 119 days. And then I'll move along I'm sorry, I don't have the months of inventory available right now, but I believe when we talked about it was about just almost at 6, little over 5 months. So it's still, oh gosh, of course, here comes my dog. He always wants to come right when I start talking. So we'll just say hello to him. Here he is. But it was still kind of like a even market, almost a almost a buyer's market, but not quite.
Uh-huh.
I think that a lot of people, what's going on is a lot of people are looking at mainland news and they're seeing buyer's market, buyer's market. And so buyers are coming in and they are sort of trying to negotiate real hard,
Mhm.
but it's not completely a buyer's market in Hilo right now on the east side. And so sellers are still really hanging on to their price. And so there's a lot of negotiation going back and forth, a lot more than normal. And I really think that's what's going on, is that people are getting confused by the news. So we'll move along to Puna. In Puna, there are 369 active listings as of October 13th, and 146 contingent, and 62 sold in the month of September. In Puna, the median sales price was 369,000, which is pretty consistent with the month before. That was 379. And you can, again, about 2% off. People are negotiating about 2% off of the most recent list price. The average days on market also went up in Puna. It was 91 versus 70 from the previous month. And then, would you like me to do HPP really fast?
Yeah.
Okay, so HPP is one of the largest, I think it is the largest subdivision. Thanks, my brain, they want to think it's just loading. My brain's loading. It's the largest subdivision in Hawaii, and I believe Hawaii, I know it's on this island, is the largest and most fast growing subdivision. So last month, or as of October 13th, sorry, there were 99 active listings in HPP. So almost, actually, there were more active listings in just that neighborhood than all of Hilo, and 35 contingent or under contract. Contingent and under contract are somewhat synonymous, so we'll just lump them into the same category, and 19 sold in September. The median sales price was 479,000, and so that's pretty consistent to it was pretty in line with the month before, which was 490. And again, people are negotiating about 2% off of the most recent list price. Average days on market was 90 in September, and that jumped up a lot from 59 the previous month.
Okay. So we kind of figured that your market's kind of like flat, right? It's not going up, it's not going down, it's not too soft. It's just, but the thing is that sellers are still hanging on, right?
Yeah, so in all three areas, there were just around, mid 5 to 6 months, just under 6 months. No area was really, it was pretty even. So it's an even market in all areas for the most part. All areas are still slightly more seller than buyer, but it is shifting more towards the buyer. So it seems like buyers are just really trying to negotiate, and it's not quite there yet.
Right.
Not quite.
Oh, well, God love them. At least they're trying. So
yeah, we have gone back. I've gone back and forth with a few of my buyers, just trying to negotiate stuff. But one thing I am noticing is that we have been able to negotiate terms a little bit easier. Price people are really hanging on to. And then in certain areas, when folks bought in 2023-ish, we're seeing that, or what I'm seeing is that they are in a position where they're losing money. So that's another reason they're not wanting to negotiate off of their list price.
right. And we're seeing that in West Hawaii too. In fact, we're going to be discussing that at the end of this show about what happens when you bought less than 2 years ago and how that looks for you now, and then some realities you're going to have to face. So we'll be discussing that. You can bring your 2 cents with you on that one, Yui. So,
Okay.
sounds good. So let me go to Lance then. Let's see. Ta-da. Hold on. Mhm.
My chickens outside, well, not mine, but
But your dog is
Hilo's
beauty.
chickens are saying hello if you can hear them.
Hold on. Um, ta-ta. Hold on.
Exciting in my house. We got my dog and chickens and
Our chickens and roosters are driving me nuts. I made the mistake of, Kimmy goes down and feeds them typically early in the morning, and she had to go really early a few weeks ago. And so the chickens missed it. She fed the horses in the dark because they were doing something. And so I fed them up here by the house, and now they won't leave.
Oh no.
Waiting for me every morning. Kimmy's like, why were you out there like a wild man this morning yelling at chickens? And I said, because I made a mistake and I fed them.
That's like
So-
feeding my cat next to the refrigerator when I go to get my coffee in the morning. So I get my cream out of the coffee, out of the refrigerator.
Yeah.
So now the cat has to like kick my ass to get me out there at 6:30 in the morning if I want to go or not. So don't set bad behaviors.
I know. My cat knows that the coffee is made before it's fed. It's like putting on your oxygen mask so the window blows out of the plane. I put on mine before I put it on the cat, right? They know. And then the dogs know. So,
And everybody's up begging for food.
yep, exactly.
can I still get in line for some breakfast?
Yeah.
Maybe
Yeah, I
not
want
dog food though.
I want my cookout on the grill at KLD. So
I'll tell you what, that chili the other night was so amazing. I don't know if you saw the video on that, but that was good.
yeah. And everyone was like, I want some. Yeah. Okay.
All right, I'm going to jump into the market real
Let's
quick,
hear
and
it.
I'm going to rip down the numbers really quick because you know that actually every single one of us do a separate report on our own with Julie and Eric, so we dive in deeper. So this is going to be a quick rundown. We're going to talk about the single family homes real quick. Median sold price 1.297 million, so we'll call it 1.3 million. Homes selling at 96.5% of list price at sale time. Median days on the market is 51 days. The median days for ones that are in escrow right now is 46 days on the market. So if they all close, that's going to lower our median days on the market. Inventory, big one here, 3.5 months. So it's clearly still a seller's market. It's 6 months. Remember, this new here, 6 months on the market is 6 months of inventory is an equal market. So 3.5 months, it's still at a seller's market. But remember, don't think it's not COVID time. Don't get, listen to your realtor, look at the pricing. What you need to close or what you need to get your new place has nothing to do with what the value of the home is. So I think we're going to talk about that.
Amen.
So none of that has an effect on what somebody's going to buy your house for. So, because their realtor is going to be saying, here's what the market's doing,
Right,
so
right.
help us
And
out.
then- and the buyer's agents are like this, cut.
Yeah. So I think right now too, so the inventory trend right now is actually down 7% from last month. So, and it's down 21% year over year. So the inventory is down. If that continues to drop more, it could even make it more of a seller's market.
Okay.
Active listings are 163. If you've listened to us for the last 8 years, you probably 165 to 185, somewhere in there is a normal market. And new listings, 29 in the last 30 days. Pending listings, there's 28 out there. And the median price on the pending listings is 1.181
Oh,
thousand. So
it's happening.
yeah. So key insights. Market remains competitive with limited supply and a strong buyer demand. Sellers continue to hold leverage, but accurate pricing is critical. Buyers should act quickly and be ready for faster closings. Sold to list ratios at 96.5 suggest slight negotiation room, and inventory trends indicate continued upward pressure on prices. So we'll see. It might push the prices up a little bit, not a lot. It depends where interest rates go, things like that.
Mhm.
You want me to jump into the condos really quick, or is
Yeah,
Eric
yeah.
gonna go over that? Okay, overall for Kona, because we do sell a ton of condos as well. Median sold price, 550. That's down 3% from last month. They are selling at 97% of asking price. So even though they're going down in price some, they're still selling at 97% of it. Median days to sell is at 87, but that's still 34% faster than it was last month.
Mhm.
So median days on condos pending is 100. So that's telling us a lot of the ones that were sitting on the market have gone into us. So that's a lot.
Mhm.
Inventory, 11.62 months. Clearly a buyer's market there on condos.
Mhm.
But again, don't get too cocky because they're still selling at 97% of the sales price. So if your realtor's looking at you and giving you comps and it shows where it's at, there's not a big, there's not a lot of market movement there. Active listings, interesting. Active listings right now have a median price of, median 151 out there. I'm sorry, the median price is 575 on those. New listings, there was 30 new listings this month with a median price of 607,000. Pending listings are 23 with a median price of 625. Market insights, market conditions favor buyers with the higher inventory and longer market times. Sellers are showing increased flexibility. Sold to list ratio is up 2%. Buyers can negotiate favorable terms and should watch for price reductions. I think if somebody's seeing a price reduction, you better look at it closely because they finally listened to the realtor, I think.
That's right.
And it might be priced right. So make sure you prepare your financing and pre-approvals early so you can act on a good opportunity. Key takeaways, ample inventory, strong buyer leverage, long-term investment potential remains solid in North Kona, and stay alert to market shifts and be ready to move quickly on standout property.
There you go. Boom, boom. I love it.
Yeah.
Okay. Okay, so just so you know, I did a little research too on our numbers. That you had said last month that it was a rocket month for September, right? Remember there was
173%
some crazy
year-over-year
right?
sale.
Well, as of now, we're down 54%. So it's like this crazy
Yeah.
everyone's in and everyone's out. Everyone's in, everyone's out. So, we were listening to
How many would we say we're in pending? There's pending right now on condos.
how many?
23 pending.
Okay. Okay, there's
So the chance of
they're
23 of those closing in the next 10 days, right? Or
pretty good,
9
right?
days, 8 days, not maybe
Okay.
half of them, maybe 10. So what will 10 put us at?
That will put us at okay, so last month it was 23. Now right now it's 11. So if you add 20,
Okay.
so we're almost even then, if that's the case. Yeah.
So yeah, we'll see how many close, right? Because
Yeah.
we don't know how many just went into escrow and how many have been in escrow for
Yep.
40.
Well, I'll tell
40.
you guys, my condo has not gone into escrow yet. Come and get it. We dropped it $30,000. Okay, so Eric Ziemelis, what is
Sure.
going on with all the neighborhoods?
All right. So I am Delaney, as usually talks about the different neighbors, but I will be taking over today. And what's interesting about this is that you guys have an overall view of all the numbers, but here are the actual numbers of three particular areas that we've been monitoring ever since the beginning of this of this TT&T. One is Lokahi Makai, Pulani Estates, and Ali'ilani. And each has their own. We can just see how they're doing compared to roughly how just statistically how they've done in the past. Our first one is Lokahi Makai, and we have 4 active listings, which is really amazing because usually in this subdivision we just have 1 or none. So so there's a lot, and all of those listings have been on the market for a long time. The newest one is 32 days. We have 113, 50 days, and 114 days, and we have 1 contingent this time. And the numbers, just to give you an idea, the contingent was listed at 985. The one that's been on for 32 days is 1,050,000. 113 is 1,040,000. The one that's been on 50 days is 972,000 and 899 for the 114 days. So Lukai Makai is, I would say, is just kind of my interpretation would be is just it's not moving as fast as it has in the past, and definitely has some inventory on that. So Pualani Estates, and we have one active, one contingent, and 3 sold. All right. And the prices range, let's go here on the one active. The active is 1,100,000. The contingent has been on the market for 239 days, and the active just came on the market. It's been on the market for 1 day. So we little low on Pualani Estates. Usually there's more than one at any given time. The contingent was on the market 230 days at 999,000. And then the 3 that are sold, one was on the market for 20 days, and that was it was listed at 999,000 and it sold for 975. So that is a 97% sales to list ratio. And this is after they've adjusted the prices, right? So like what Lance was talking about, the idea that they should be fairly close by this time. I mean, we're not going to see a 10% drop if they've already come down a little bit. And then the second one was on the market for 3 days, and this is the outlier because this one sold at 104%. It sold above asking by 50,000, and it sold for 1,100,000, and it was listed for 1,050,000. So somebody really liked that condo, wanted to make sure that nobody got it, so they definitely bought it quick and got it off the market. And our third one was on the market 131 days. It was listed at 1,075,000 and it sold for 1,020,000, a 95% ratio. So Pualani Estates, like I said, it just is. I would say that's pretty close to about where we've been going. The whole time that we've looked at it. And then the big turnaround here is Aliʻilani, and what happened to Aliʻilani, they had a increase in the HOA fees, and I think it was about $200 per unit roughly is where it was. And when that increase came on, because there's a lot of people that are living there full time, and that extra $200 threw a lot of people off, so they decided to sell. So at one time, I think we had, was it 14 units for sale there, something like that? Something really crazy. But now we have moved past that point, and we have got 3 active, 5 contingent, and 6 sold. All right. So let's start with what's for sale right now is the answer. And one active, first active has been on the market 35 days, and it's listed at 450. The second active has been listed for 205 days at 519. And the third one is this one, wow, 241 days at 565. So I wonder what's going on with that one. It sounds like that one might be ready for a little bit of a haircut for pricing to get that off the market. The contingents one was at 44 days, and it was 439,900. The second one was on for 75 days, and that's 469,500. The third was 59 days and 475,900, and contingent was on this one is contingent was on the market for 300 days and 569. So now our 6 solds.
And then, do you want to go through those?
Yeah, so since there's so many of them, I can tell you this. What's interesting about the solds is that they all sold for just what Lance was talking about, 98% of the market, right? There was one that sold at 100 and one that sold at 97, and everything else was 98. So good job, Lance. Just shows that those numbers actually translate into regular.
Amazing how that works.
Even the median price. So on the ones that, because Eric and I have been looking at some of these houses, I can attest that the ones that have been on the market forever in almost all of those neighborhoods need help. They need some help. We have seen some that are probably a good $100,000 renovations are needed, if not more.
Yeah, the ones it's kind of since I was with Julie at a lot of these that we saw these. What is interesting, we were talking about this, is houses that need to be renovated. There's, of course, you have the level that it just needs a flat out, everything is original and is trashed and needs to be renovated. So everybody can acknowledge that. What's that?
That one in Lakai Makai.
Yeah. So everybody can acknowledge that that is a condo that should be priced approximately, figure for the renovations, maybe $100,000 lower than it should be. But it gets questionable of if it's 20 years old and it's slightly worn, but it's dated and still is kind of worn out, it still would need the same amount of upgrading, but you don't have to upgrade everything. So they only give you 50% off, right? I mean, it would only be like $50,000 off. So, but it still cost you $100,000 to renovate it to get it bring it back up to where it needs to be. So there's this kind of this gray area of at what point does the price reflect on where it needs to be, and that's kind of where probably some of these are sitting. And the complete contractor specials sell pretty well. It's the ones that are not quite complete contractor specials that you have to decide where's the price on that.
Right. And then with so much to choose from, when people walk into a beautifully updated condo, they're like, I want that one.
Yeah.
And so if you have like 8
Yeah, for $50, yeah,
and there's 3 that go like this, I don't want that one.
Yeah.
Yeah.
So many people aren't here either, really, to supervise the repairs too, right? If they're off island buying.
Yeah, that'd be really difficult, and you really need to be around. We have one of our buyers who is building a house here, but he lives on the mainland, and he's been. Did I get this right? Is it every 2 weeks, Julie?
Every 2 weeks.
Every 2 weeks for 3 or 4 days to oversee to make sure that this thing actually goes according. He's a contractor on the mainland, but to finish it off, he's here that much to make sure it gets done right.
There we go.
And he might get done on time too.
Yeah. Imagine what happens when you push people. Okay, Jana, what's going on with in the Waikoloa Village and South Kahala region?
Yes. Number one, I'm now a real agent on the 365 Hawaii team. Wahoo! And my plan too is to get a license in California so we can do referrals out there and back and forth. But to start with the Waikoloa residential market, in October, right now, there are 49 active listings in Waikoloa Village. This is very interesting this month because they go from $599 to $3 million.
Wow.
$3 million in Waikoloa Village.
Wow. $3 million.
Which is crazy. So why is that? Well, it's because the Olalani has put 5 new listings on the market, and that's pushing up the average because our average now is back up to $1.2 million with the median at $990. But that is because you've got these $2 and $3 million homes in Waikoloa, which is unprecedented. There are not $2 and $3 million homes in Waikoloa Village typically. Yeah. So we'll see how that goes. The first 5 are active and live now, so that's nice. And so we'll see. It's a clear sign, I think, that Waikoloa Village is stepping into that luxury market where it hasn't had that price point in the past.
Jenna, that's that new neighborhood, right?
Yes. So Waikoloa is like a big cul-de-sac. And if you go all the way to the end of the cul-de-sac, it's kind of at the very end.
They created a new road just for that neighborhood, didn't they? Or
so they said
they were going to?
They said they were going to. So what the scuttlebutt was for a while was that they were going to build a road from that new neighborhood and take it on down to Monolani.
Yeah.
Because right now there's only one road out and it's kind of a fire issue. With Waikoloa Village, but that hasn't happened yet. So
they built these luxury homes thinking there was going to be a quick shot right down to Monolani.
Right. It's not going to be anytime soon. But we are getting a traffic light, you guys.
Oh, I heard about this. Woo!
Yes. I'm hoping you're going to tell me where that. I'm hoping it's where I hope it is.
It is.
It coming off the highway into.
It is. It's at Waikoloa Road in Paniolo, which we desperately need, and we have for a long time. And like everybody here is just so excited because that makes 2 because we also have one on Ho'oko at the school, but this one is going to be I think it's temporary until they get a roundabout built, but it's really nice. It's needed because
that's the most confusing intersection. It's just insane.
You can't believe how many wrecks are there. It's just been bananas. You see cars that roll because people that are coming up and down the hill, they'll
60
stop.
miles an hour.
Yeah, or they'll stop because they think it should be a stop sign and it's not. And so sometimes people will stop, and then the people on the other side that do have stop signs don't know what to do because it's just very, very confusing. So I think everybody in Waikoloa is super happy that we're going to get that stop light there.
That gives me such bad anxiety. Every time I go there, I'm like, oh gosh, I can like have to take deep breaths. I consider going a different way, like out that other exit and going the U-turn. My sister got in an accident there too. Yeah. So that's super good.
When we go get our mail, we pull out and turn right and then go all the way around the shopping center so that we don't have to try to go straight across because it is crazy scary sometimes. So anyway, that's the big news in Waikoloa. We're getting a stoplight, and we have 5 new houses that are actively listed in the new neighborhood. So that's exciting.
So the new instigated a $3 million house boom, huh?
We'll see. We'll see. It remains to be seen.
Yeah.
Jan, is that new neighborhood, like just above the village, but in the village, kind of, but or something like by the skate park, I think?
Yes, just past the skate park. And they're in a different HOA. They're not in the Waikoloa.
Right.
Oh, really? Wow.
Yeah.
They look nice. How is it? You been there?
So I haven't seen an open house yet, but I will definitely go and make a little video and we'll put it on there as soon as we can. And I don't even think they're all finished yet.
No, I looked at a drone flyover and it didn't even look half built out. I don't think.
Yeah. Oh yeah. Well, no, it's not built out at all, but I'm talking about even active listings. I'm not sure those are yet. So it might be a hard hit experience with closed-toed shoes.
Yeah.
We'll have to dig those out of the closet somewhere. Yeah. So in September, we had 14 homes that sold in Waikoloa Village. Between 515,000 and 1.5 million. And the average was around 900 with 86 days on the market and 95.8% of the current list price and 93% of the original list price.
Okay, so there's 7% sale going on there.
Well, it's like you were talking about. The sellers kind of are having a hard time coming off those 2021 prices. But they are. So it's
because they don't have a choice, Gianna.
I know. Preaching to the choir.
Oh, sorry.
Monalani residential. We had 7 active residential listings in Monalani, and of course, those are the resort areas, and those homes are, more luxury from 5.7 million to 17.5, and they're typically on quarter to 1 acre lots and pretty big, like 3,200 to 6,200 square foot houses. So those are a lot more luxurious down there. There has been only one sale in September in the Monalani area. It was a 6-bedroom, 6-bath, and it closed at 8.2 million after 156 days on the market with 92% of the current list price. So not a lot. It just kind of underscores, I think, that buyers are active and ready to move on quality homes. I don't think you have as much issues with financing there. It seems like those are a lot of cash buyers. And by the way, I wanted to talk about Travis real quick because I had a house that closed in September, and they used a mainland bank, and it was a nightmare. A nightmare. Yeah. So I just want to point out to people who are thinking about buying in Hawaii, use a lender that knows what we need in a contract. So they have to understand the appraisers. There's not a whole lot of them. You have to book them in advance. We've got different documents that are due at different points during the transaction. So it's just pretty important, I think, to have a lender that's a Hawaiian. And all of us can recommend Travis. All of us can recommend other, local lenders. But I just want to, it was just
100%. Somebody that lives here and understands lava zones and tsunami zones and And cesspool. 2 out of every 3 homes sold on this island are on a cesspool. There's so many things that I
Condo
just
tells.
preach that. Yeah.
Yep.
Condo
Cesspool.
tells.
Hotels, yes.
Yeah.
Cesspool
So
is something
anyway.
that's so common that I forget that it's an issue for people. Were like,
Yeah.
oh, my lender couldn't do a cesspool. And I was like, oh, like it's just, it's just such a common thing here.
Yeah.
Yeah, so
Yeah.
We need you.
hands up for Travis. I just want
We
to say
need
that.
you, Travis.
Thank you.
Yes.
Hey, Travis.
Thanks, guys.
And let's see. Okay, so Waikoloa condos. We'll skip over to those now. The Waikoloa
Janet,
Village condos. Uh-huh.
Can I peep in real quick? Sorry. One of my childhood friends has a house right on the golf course that we're gonna list soon, and it's a 3-bedroom. We're gonna list it under 800, so it's partially updated. It feels like you're sitting in the golf course, so it's just yeah, that's coming up. I just
New,
wanted-
is that for
It's
Waikoloa Village or Waikoloa?
yeah, Waikoloa Village.
Okay, Village.
Yeah.
Good.
Yeah.
Yeah. Oh, that's nice. That's a good that'll be nice. That's kind of what you're seeing now. We're about 900,000 for the average price. And I think the average price, like I said, is being driven up a little bit by some of the new construction that we're seeing in Waikoloa Village. So that's nice.
Well, she's gonna list it right under 8.
Okay, that's
It's a really
that's
competitive
nice.
price, and it's a nice view, and has fruit trees and everything in the yard, and so yeah, if you got anybody for that.
It's a beautiful place to live. I love living in Waikoloa Village. So, let's see, Waikoloa Village condos, and right now we have 28 active listings. And they go from 329 to 775 with the average about 482. 3 sold in September from 380 to 625, and the median on the market was 176 days.
Ooh.
So that's a long time. And they sold at 98% of the current list price and 92% of their original list.
See.
So that kind of tells us that, they started off with their 2021 price, and then it sat on the market for half a year, and then they had to drop it. That's kind of what I'm seeing over and over again.
Yeah.
And so, that's just kind of what's happening right now in Waikoloa Village.
Mhm.
In Manalani condos, there were 27 active listings from 1.1 to 10.95, with the average around 2. September, we had 7 condos that closed from $1,075,000 to 2.3. The average was 1.68, and average days on market was 90. So much different in Manalani than it was in Waikoloa Village as far as the days on market, and 98.8% of their current price and 97% of their original price.
Okay. So
That's a different story too in the resorts. If you look at Waikoloa Resort and Pua Cove residential, there are 5 listings from 1.595 to 11.995, and no sales in that area in September. It's kind of a cash purchase territory in that area, and so they take a little bit longer to sell, and they typically sell about that if it's priced right, they're going to sell the same thing as everybody else, just right around the list. Let's see what else. Okay, so where was I? Sorry, Waikoloa Resort condos, 43. So less than we had the last several months. They went from 663 to 3.34 million. The average is about 1.44. I've got one in there, by the way, just dropped the price to 715. It's 1 bedroom.
Good job. Good job.
Yeah. So it's a short-term vacation rental, which all of them can be in the resort area. That's how they're zoned. And so that's a lot of investors in there. Average days on market with the 39 listings right now is 115 days. And in September, 4 condos closed. 640 to 1.4, 85 days on the market, 97% of the current list price. And let's see. Oh, and I think that's, oh, wait. No. I have Kohala Ranch. Real quick, I pulled up Kohala Ranch. 7 active residential listings in Kohala Ranch from 2.1 million to 5 million. And average days on market is 152. 0 sales in September.
Yeah, because you haven't said anything. You've been selling for a while.
Yeah.
So-
Yeah. So 96% current list price, the one for the ones that have closed this year.
Yeah.
So I just pulled it up for the year because I couldn't find anything in September.
Okay. Okay.
So-
So in general, is your phone ringing? Are people trying to like buy in your area?
Yeah, I think it's still, people still have to buy houses. People still have to sell houses. The 2 listings I've got, it's been kind of slower. It's been taking longer for sure. But yeah, I think there's still things going on. I'm still seeing open houses. I'm still getting phone calls.
Okay, that's good. Okay. So
I want to put a plug in for Jana too, real quick. If I could just real quick, one thing to remind people, because the world is hearing so much about what's happening in Maui, right, with their condos and short-term rentals, and the big changes that happened about a year ago is that the state gave the county the option to now rule on the residential housing. They've kind of always ruled over on what the resort stuff is. So they're seeing them pull away from condos that were approved to be short-term rentals in a residential area. But what's happening is, Janet, to point out and give you, to point out to people across the country, is that if it's in a resort zone, like you got out in Waikoloa, they can't change it. You don't have to worry about those.
Right.
And that's a big thing to make a difference for people that may be hearing something about short-term rentals in Hawaii and the problems they're having because Maui is making so much news these days. That if you buy something in these areas, and we're seeing a lot of Maui buyers over here now too. So
they want to be able to count on their investment. That's
yeah. It can't be taken away from you. That's so just to throw in that plug for you. Thanks, Jan.
Okay, so we are being blessed right now by Andy Madrid.
I think the biggest issue, which you guys probably touched on maybe already, is I think the government shutdown has got some people nervous.
Mm-hmm.
I had a new listing that came on. It's been on a week, and I'm getting my first showing request, and I think it's a great deal.
Mm-hmm.
So I was surprised that I didn't get anybody even calling about it,
Mm-hmm.
But I've got 3 properties in escrow. I had a closing today.
Okay, that's good. Congrats.
I have 1 in Volcano, 1 on the Hamakua coast, and 1 in Leilani Estates. So there are people out there buying now. The majority of this is cash.
Yeah.
Now it's cash.
In fact, I looked on the on MLS, and it said that 49% of the houses sold in the last month have been 49% of them are cash.
Yeah.
Buyers who have it, they don't care about what the interest rates are. Well, are continuing to buy, but they're using cash, so they're not affected by the interest rates.
What area was that, Julie? I'm sorry, I missed what you said.
That was island wide.
Oh, okay.
The biggest issue we have down here is that being in lava zone 2, that even if I saw a news listing come up in Mililii for $735,000, and they're offering owner financing. Why? Because it's lava zone 2, and anybody coming to the table say, "Yeah, I want to buy it." 20% down is not going to cut it. They can't get insurance. It's only going to cover $450,000 because HPIA is the only game in town. So someone's saying, "Well, I want to buy that house," they're going to have to come up with 300 grand, close to 300. So that precludes most people from buying with financing. They need seller financing or they need to come in with cash. And the ones that are coming with cash, honestly, for me, it's higher price stuff that's moving. This middle of the ground stuff, the 450, 500,000 stuff, the move up buyer price point, they're stuck because the interest rates suck still.
Yeah. Okay. Well, Travis gave some good news today a little bit.
Yeah.
Well,
Don't yell at Travis.
They have them, but they're not great. So it's people are wishing for they're like, what happened to 3.5%? I'm like,
Yeah, no.
it's not coming back. It's not coming back.
But people are still asking for that. They're thinking that it's going to go back to that, or
You get people out there that are thinking they're waiting for the market to crash. I'm like,
yeah.
keep waiting,
Yeah.
I talk to people every single day about that. Usually it's the Reddit morons,
Oh.
the Redditors that think that,
Yeah, it's like, oh, the market's going to crash. In fact, it's interesting because there's still after we listen to everybody in this spiel, the sellers aren't going to just crash their prices. They know that they still have something, and they're willing to wait. And so there's only the lowest, I think, with Jan was saying a 7% discount, 93% list to sale. And so no, I don't see a crash. And I think everyone raise your hand if you don't see a crash. Okay,
No,
there we go.
I mean, if I look at like what's in, there's 14 properties in escrow in Ocean View right now. I don't know what's going on in Discovery Harbor. Discovery Harbor is a little saturated, but when I look at Ocean View, there's 14 properties that are in escrow. That being said, there's some of them are financed, but most of them, these are all going to be cash sales. I look at the price point, they're all going to be cash. There's very few because we have so much stuff that's not permitted. And I'm looking at what's in escrow right now. I'm looking, I bet you every one of those except for one, maybe two, will be cash deals.
Yeah.
Of the 14 that are escrow. There are 62 properties on the market right now in Ocean View between 40 grand, which is a shack in the woods, and $2 million, which is Tiki Mama's, if you guys are familiar with it.
Oh, that's commercial.
It's commercial.
Yeah.
They're listing as residential because it's got a house on it, but it's for sale, but that's at 2 million. But we still got one that's 815,000. It's for sale. The sold stuff we talked about last month.
Yeah.
But if I look at what's sold, say in the last, for October, even though, I've had three sales in October. Cash, one at conventional, listed for $299, closed for full price.
Yeah.
$299.
Well, and also South Hawaii is, it seems obviously to be a little bit more price sensitive than other places. So when you have people not getting paid for 3 weeks at a shot because the government shut down or not feeling good about the market, you might have a little pullback from buyers, right, in this market right now.
Yeah. People that are, people that are stuck with the government shutdown. But there's people that are more immune to that, like where Janet's going to move to.
Yeah.
Those people have got piles of cash. They don't care what's going on with the government because they got piles of money.
They got
there.
piles of cash. There you go. We got the tale of two markets. We got the move up buyer that can't move up because they can't afford it, and we've got people coming with their pensions and a pile of cash. So
Exactly.
Okay, so how's your phone ringing?
I got, people that are calling for a lot of vacant land. They're buying, a lot of people are, I wrote an offer yesterday,
Okay.
for some land that's been on the market, 14 days.
Oh, okay. So it's okay. So there's deals.
Um,
Okay.
The offer I have in Leilani Estates is cash. It's a house. The
Mhm.
one in Volcano, I closed one today in Volcano. Was vacant parcel in Country Club Estates.
Oh,
They paid a premium for the property.
yeah. And is that like next to the golf course?
Yeah, it's a golf course, so it was a little tiny lot. They paid 82,000 for it.
Yeah. Okay.
You know.
That sounds good. Okay. Then, since you mentioned the business with the seller, I'm bringing this as an open discussion real quick, everybody. We're going to talk a little bit about what is going on with sellers and their concept if they actually what's it called? When they bought their house, if they bought their house in the last 2 years, what are they experiencing right now, and what should we tell them as an advice if you were waiting to get all the money back that you put into your house in the last 2 years?
Can I throw in something really quick, Julie? And I'm sorry because Andy was talking about that cash
Yeah.
and the buyers. I had done another article on LinkedIn about that. I'm just going to run that really quick. It was interesting. because last month in Kona, the mix of the sales that happened last month, conventional financing was 51%,
Mhm.
cash was 31%. That were the two big things, but the median price for the cash buyer was 1.8 million. The
Ah,
median price for a conventional loan was 1.1 million. So I thought that was interesting. Yeah, sorry.
I am
Back to your
really glad
question.
that, well, sorry, now I'm gonna add on to that. Just
Yep.
because a lot of people come with cash and they just think it's this huge upper hand, which it is an upper hand, but it's I think a lot of people don't realize just how many cash buyers are out there. And so it is an upper hand, but you can't, that whole saying, cash is king. You are not king if you have cash. There's lots of kings around.
No,
There's
yeah,
lots of kings.
that's a great point because you look at that median price, the cash buyers are what 700 grand more than the finance buyers.
Right.
So cash is not king. You're right.
And also, will you guys agree that when things were going so fast in 2022, 2023, having cash beat you out of getting somebody who had a mortgage because there's like 5 people looking at your house and you thought, okay, I want to be able to close. And I know I'm going to close. I'm going to take the best offer, and that's cash. Right now, because it's kind of, even if it's not a complete buyer's market, let's just say for single family homes, but there's still people who are out there having days to look at these houses. It's not as important to be a cash buyer as it was back 2 years ago. Am I correct?
Yeah, I'm seeing that. I think the big thing was 2 years ago, those people turned right around and financed them. I didn't realize that was happening behind the scene. And then Travis can probably tell you a better story than that, but I was surprised. And then I started looking at how many cash sales gotten a loan within the last 3 months. And I was like, wow, they were pulling out their savings and they were buying them to beat out that finance buyer and immediately financing it. So
During escrow or afterwards?
right after it closed.
Yeah.
Travis
So
can tell you more.
yeah, so yeah, especially during the pandemic, I had a lot of conversations with people where we would do a pre-approval meeting with them fully intending to pay cash. And they would say, look, I'm going to pay cash, but I don't want to tie up this money forever. And so we do what's called delayed financing. And so typically when you buy a property, you have to wait 6 months after closing on that property before you can do a cash out refi.
Yeah.
But if you pay cash for it, or if you use a home equity line of credit on a different property or whatever, you can, subject to LTV restrictions, you can pull out a mortgage on that and pay yourself back or pay back the line of credit, right? But your cash out amount can't exceed like what you paid for the property. And so a lot of people did that during the pandemic. Lance is absolutely right, where they had the money, they paid the cash, and then they did a loan with somebody like me after the fact, especially with money being that cheap, right? So if you could do a delayed financing at 3% flat, there's no reason to keep your money tied up in it, right?
How
And
come
so
you didn't tell us that back in 2022 as a strategy for sellers or buyers? I mean, was that hidden information you didn't want to share
I
with
saw
us?
a lot of that. I saw a lot of that exact happening when I used to sell in Southern California. They would come in and pay cash, and they'd immediately get a loan on it because they wanted the cash to beat everybody, and then they get a mortgage, get their cash back because cash can go, particularly high net worth individuals. Their cash can go make them more money somewhere else.
Yeah.
Kind of in real estate. But you're right about cash isn't really king because our market is different here. We're on an island, we have limited inventory. But I sold a property to my worst seller client ever. I had that more than 2 years, and I finally closed that a couple months ago. Well, I get a text from her every single day. She thinks I'm her best friend now, even though we got really like this sometimes. So she's in Florida now. And Florida has a lot of inventory that's coming back on the market because financing's falling apart for a lot of people. Over there, cash makes a huge difference. And so she's a cash buyer, and she has a lot more leverage, more so than we would see people here with cash.
Okay.
Yeah, one of the things I've also seen with cash, it's kind of they always come in. Well, since I'm paying cash, I can pay less than somebody with financing.
Yes.
Oh,
Yeah, and I tell them, sellers don't care. As long as-
That's
sellers-
cool.
That's
I'll wait the
I'll
extra
wait 2
15
extra
days.
weeks to make 200 grand, right?
Yeah, totally. Yeah, that's exactly it.
yeah.
Yeah.
I mean,
So,
that's my
yeah,
next
they think
exactly.
they-
I'm bringing cash in, give me a deal on the house. But
Yeah.
for sellers who couldn't have run the risk of having someone fall out of financing and fall out of escrow, but some of them are willing to do that. And so
The deal that I'm working on that I was tied up with as I was coming on, and so these people, they're from the Bay Area and they own a property in Saratoga, California.
of course they are.
So they're coming here and they're buying this property in Hamakua Coast, and we deal through. It was a very difficult property to comp out, and the asking price is $2.5 million. So I work on the numbers, said, here's where we need to be. And I said, here's the comps, here's the data shows here. And they wanted to come in low. And I said, here's your problem. You come in low. I said, one is, I think you're wasting your time. You're wasting my time. And more importantly, is if the seller thinks your offer is too low, they don't respond. Then you're stuck. You have no leverage. That's exactly what happened. They came in really low. I didn't want to write the offer. The wife wanted to come in really low. And I'm like, no, this is where we need to be. So they agree. They write the offer. We never get a response. So when I reach out to the listing agent, say, hey, are your sellers going to respond? They're like, well, we just think your offer is too low. So the sellers really aren't. I'm like, it takes two people to dance. Give me a counter, at least, even if the counter is coming back at full price, because at least you're communicating. That's exactly what happened. So she sends me an email, this is what we want. And I called her the buyers. I'm like, this is what happened is exactly what I told you going to happen. So what they do, they're paying full price
Oh,
because they came in too low and they wanted the house. I said, you lose all your leverage. So that's exactly where they're at.
that's pretty typical. Like, we've seen a lot of buyers trying that technique. Let's lowball them and then come up to where we need to go. But you piss them off, and that might be the end of that.
I had a buyer one time that did a low ball and then they turned around and countered at higher than list. So they were really ticked off.
So for people who are listening to this is a good strategy to understand how this works, because with Andy showing you is that you came in trying to get a deal and you didn't. And if you came in like with a little bit more of a higher price, there you might be able to negotiate at that point. But we've dealt with sellers too who think that you're an idiot and that, they're just going to go back at you, right, with full price. So, yeah.
But, I always have that conversation with them, let's just make up a number of $1 million, and you think it's worth, I don't know, 950 or something. But I always tell my clients, like, your best strategy is to come in a little bit less than you think they'll take and a little bit more than you want to offer. And a lot of times they'll be so close, they'll be like, I'm not going to lose a deal over 20 grand, or 10 grand or something like that. Right. And to me, that's been the best strategy. But, you got to feel every deal's different. But I like that strategy. That's my favorite one. A little bit less than they want, or than you feel that they'll take, and take it from there.
Yeah. Yeah. And I guess also how long it's been on the market. Then you start doing where's the motivation on this? So, yeah. And that's the reason why you hire a realtor, because a realtor has been through this enough times to be able to counsel you and show you advice because of their experience. So,
The other thing is like all of us have been doing this a while and have relationships with other realtors, so we know what realtor works which way. And so like when you're going to submit an offer, you kind of know how to communicate with that person already and what might be successful and what might not be. And I feel like that's a huge upper hand when huge reason you'd want to use a buyer's agent.
yeah. In fact, just today, my buyer said, I really like this house. I think it's overpriced. So I saw the realtor today at the caravan, and I said, so how motivated are your sellers? And they've already moved out. They're motivated. How motivated? Not as motivated as you're thinking of trying to lowball me. And I go, she's like, well, bring an offer. We'll see. That's usually what they say. Bring an offer. But it's at least knowing that at least the seller has moved out, so they are a little bit more motivated. And at least I was able to have that conversation. And that's another thing too with agents. They're able to call the other agent and say, "So, what's happening here? What's going on?" Because if you have like estate sales where kids just want to get rid of the property, you're probably going to get a better deal than somebody who's going to hang on to every last penny. So, yeah.
I think my favorite one too is when I'm calling up the listing agent, and maybe it's been out there a little while, you know, and of course, you know, they're going to tell you, I'm like, what were your guy? I mean, you still ask the question. We know, I know he's not going to tell me, or she's not going to tell me, but I still say, you know, what will you guys sell it for? Well, they'll sell it for the $1 million listing price. We know that for a fact. But my second question is always, well, tell me what they won't sell it for. And a lot of times I get a puzzled look, like, what are you talking about? What's the best offer you've had that they didn't take? Well, 925. Okay, so now I know I'm between 925 and 1 million, right? So I know, you know, and you can share that with your buyer. Say, look, I'm not going to write it up for 900. They've already turned down 925, and they walked from it. So we got to come up somewhere between that 925 and 1 million. You know, so
Yeah.
that's always a good strategy.
I love that.
Yeah. And then going back to sellers who are trying to sell their houses right now. I wanted to get you guys' kind of like discussion around if you were a seller right now and you had bought your house in the last year and a half, maybe two, what would you expect the pricing to be at this point, knowing that that's the case?
The sellers are going to have to accept the fact that they are not going to recoup their entire investment in the property.
Mm-hmm.
It's not, you know,
Right.
our market isn't like that. I mean, there are some that will, and they'll get lucky. You know, I closed one earlier this year, not early, but a few months ago. They got higher than what they bought the property for, but once they factored in the ownership costs and the fees to pay, title, escrow, and compensation to the agents, they're into it. You know, they're short.
Right.
That's the reality. Most sellers are going to be short.
Mm-hmm.
You know, and if they have a life-changing events, like I've got a new listing, the sellers got divorced. It kind of sucks.
Mm-hmm.
You know,
Yeah.
because they're not going to get their investment back. I mean, they got divorced, so that part sucks too. But you know.
Yeah. But they have to sell. So,
And
Yeah.
that's tough to hear for a seller. It's tough to hear, but that's where we are in the cycle. And I think it's like if you bought it before 2020, then you look like a real estate genius, right? Because the appreciation is still there. Those people are still going to be able to sell it and make money. But if you bought it in 2021, 2022, and prices had gone up, you're right. It's tough to hear. And I think it's tough to talk to sellers about that, but it is what it is.
right.
It's, you know.
Yeah.
You know,
Right.
I would just add that I don't have this chart pulled up in front of me, but it was looking at different metro areas and price change from 2019 to now, and then 2022 peak to now, and then year over year.
Mm-hmm.
And so it's helpful for a market like ours that has been much more like flat to moderately positive, right? Since the 2022 peak. When you compare it to somewhere like Austin, Texas, and, you know, they are down like 26%,
Wow.
right? So it could be, you know, I don't know. If I were a
It's
seller,
positivity. It
it's
could be
cold comfort.
worse.
It's like, hey, you know, remember how like you thought you like, especially people who relocated, you know, around the pandemic. A lot of people went to Austin. They should have come to Kona, but you know, now their home is worth 26% less than what it was then.
Right. And I think there's other markets like that too.
There's plenty of other markets.
Miami. Yeah.
Phoenix
West
has done
Henderson,
great.
Las Vegas.
Yeah,
Yeah.
Boise, a lot of those hype markets.
Yeah. And that's another thing too that you know, because it just seems like we've gotten a lot of people thinking from one reason or other it's time to sell. But I don't think that sometimes people understand closing costs, and that you're right.
No, they don't. And I got really upset at a lender recently because I had a first-time home buyer, and when I sat down with them and I did, you know, like went over the process with them and everything, and I mentioned, you know, you're gonna have lender closing costs. You're gonna want to talk to them about what that is. So we go and we go and look for stuff, and they find something, and then I guess they didn't actually talk to the lender about the closing costs. But what I was blown away by was that the lender, knowing that this was a first-time home buyer, did not explain that to them clearly. And so when I'm writing up this contract, I'm like, just so you know, this is about what I think your closing costs are going to be for this. And you want to make sure that you're comfortable with that. They were like, oh my God. And so then we checked with the lender. Yes, I was right. And they just decided it was too overwhelming for them. But I was so angry because I'm like, that should be the first thing that a lender talks to a first-time buyer about. And, like I mentioned it briefly, assuming, but I don't know this lender that well.
Why did you use Travis? Jesus.
They came in with that lender. They came in with that lender, and I was like, oh.
That's the hard thing, right?
You're like, oh, who are you? It's like, oh, I'll tell you, when I was a first-time home buyer, I too was shocked when they said, here, you owe this much money at the closing table. I'm like, what? I don't know why we think that, everything just goes into the loan and you just walk into a house for free. Don't ask everybody you met. But the sellers too. The sellers don't understand all the costs that go into selling a house either.
Mhm.
And that's why we're talking about, they think that the house is worth this because they see the median price, but they forget they're going to lose probably about $30,000 or $40,000 in closing costs. And more.
I just looked at the numbers, the year to date, because that's the most important thing. Like when you're sitting down with your client, right? Like where are the numbers at year to date? Forget last month, this month. We had 173% increase in sales and cost. Forget all that. Look at year to date, and I just looked at Kona Homes year to date over last year is down 3%. And your closing cost for a seller is going to be closer to 7% with escrow fees, title fees, real estate fees, things like that. It can easily be 7%. So now your costs, your properties are worth 3% less, and your costs are going to be 7. So really, you could be looking at a 10% loss by the time you're done with everything, right?
Yep. We had to share that information with this guy.
Yeah.
And he didn't like the answer. And that's why we go back to, and I've heard this happen twice this week, actually, but I need the money. And I'm like, that doesn't really count in a market. You can't just say, because I need the money. That's what you should buy my house for.
Yeah.
Same thing I said when you walk in to get a raise. They go, I just need the money. I need more money because I need it. And they go, what are you doing for your thing? Same thing with the house. That a lot of sellers just like, you know what, I can't leave without this much money in my hand. And it's like, and then that goes back to, now I just want to talk to you guys real quick about this too. Then I'll take it off the market and put it back on next year when things get better.
We got a 3% drop year to date. I mean, we're doing good. We're doing fine, overall.
26% off, like Travis was saying, but
so even if it takes a year to get up to not being 3% down, right? And it goes now, what's your carrying cost been? I think Andy brought that up. Your carrying cost, you're paying insurance, you're paying taxes. Even if you pay cash for it, taxes on some of these homes in Kona, it's easily $8,000 a year.
$1,000 a month.
Yeah. So you're fighting for an extra $20,000 and you're going to carry it for a year. And
that's for electricity bill a year.
Yeah, exactly.
Yeah.
On principle. I'm not selling my house.
I think it's a really good idea too to get an estimated closing statement in the hands of your buyer or your seller as soon as possible in a transaction. And and you can tell them, say, this is an estimate, this is probably conservative, but I think I like to do that just as fast as I can. And I think all of us have pretty good relationships with our escrow companies, our escrow officers, and so they're happy to do that for us.
Yeah.
And so we can do that right off the
And
bat.
if I could put a little tip in for all these people out here watching us, you could actually go to the title company website here in Kona. There's got to be at least 3 that do that work for you. They have a calculator on their website that will help you see what the net sheet is when you sell your house. All you have to do is put in things like what the cost of the house is, what the real estate commission fees are, and then they have the little title like, conveyance costs and everything else, so you get a better idea. That way you can actually do a lot of this math yourself. Am I right?
Yeah. TG estimator.
Yep, tested, no guarantee estimator. That's a good one.
Yeah.
This is particularly easy to
Fidelity
use.
has one.
Because I use it all the time. Like I send out cost estimates, or I go over cost estimates with potential buyers a lot. And TG has a great calculator. I use it. And then it's property specific, down to the difference between like the recording fees for land court or regular system, right? Like just that level of detail, like builds trust with a buyer. But yeah, doing a net sheet, or if you are financing, like getting with a loan officer that's going to like run through these costs. And then a lot of times, especially if it is a first time home buyer, maybe they have saved up, they know that they can do 3% down and they saved up their 3%, right? So they want to buy something that's 500 grand and they have $15,000. And then I come in and I'm like, well, you're still about 11 grand short or whatever. And it crushes them, right? But we can come up with a strategy for, especially in a market like this, asking for closing costs, right? And then we have a story to go with it. We're not just asking for like some kind of, we're not just hitting the seller up for some random amount. It's like, these people have a down payment. This is really going to help them, or maybe they don't want to drain their entire savings, but like, that's a big part of buying a home and being prepared. Because like you, Julie, the first time I bought a home, I did like literally until closing day. This was obviously before I was in the business. I didn't know, like this guy was saying like down payment, cash to close, closing costs. Like I had no idea what the hell he was talking about.
Yeah.
I had no idea. And then like, I was just like, do we have enough, or like not like way too much or not? And then like the morning of closing, I had to text him. I was like, dude, what is it? And he like texted me back. And I like drove to my credit union, and like I had oversaved, because I was like, I don't trust this guy. He's a clown.
But you used him anyway. So,
yeah, I didn't know any better.
yeah, me.
Yeah, I didn't know any
That's the
better,
reason
but
why you
yeah.
guys seriously, and then we'll wrap this up, that I'm so into this because when I make mistakes, I like to help other people. And the problems with not understanding closing costs for getting mortgages and like, selling and buying your house and stuff, it's really important. And you know what, you could use ChatGPT to figure this out. You can also call either one of us. Anybody here will explain this experience with you. So what we're going to do is we're going to wrap it up. And I want to thank all of these wonderful human beings for being here. Thank you. You guys donate your time to help educate the market. And if you want to get a hold of all these wonderful people, you got their names. I also can put you in touch with anybody if they want to get a hold of me first. We've got all the information down below. And also, Lance will be coming back in early November to talk a little bit more about what's happening with the housing market in West Hawaii. I got Newly, who's going to be talking about East Hawaii probably the second week in November. And then with the other, so Jana's going to be doing some work with Southern California and Kona in Waikoloa. And then obviously, if you want to get a mortgage, get a hold of Travis. Now's a good time if you can do it today, actually. And then Eric, thanks for taking over Delania's space. So we'll get Delania next month. And Andy, thank you so much. And we'll give you more of a heads up, and hopefully we can get some numbers. But what you did was great. So thanks, you guys. And
can I ask you one question?
Yes.
What do you do for a living?
We sell real estate. I sell real estate. Eric sells real estate.
Travis, what do you do for a living?
I'm a mortgage loan officer.
Jana, what do you do for a living?
I sell real estate.
Nui, what do you do for a living?
I sell real estate, but I feel like this is somewhat of a trick question for some reason.
I'm just letting everybody know this is just a hobby. We're not getting paid to do this.
I'm like, what's happening here?
We are
Lance?
just armchair prognosticators on the
I
market.
let everybody know what we do for a living.
Yeah.
So.
Oh, and well, okay. So also Lance got me. I opened my email the other day and I got appointed to the resort and second home committee for National Association of Realtors. Thanks to Lance.
Congratulations.
Go ahead and spread the volunteer.
Congratulations. That's awesome. I saw it come in too. I knew you had it. Good for you.
Yeah,
Thanks,
Yeah,
Lance.
congratulations.
Good job. Good job. So if you want more information, please make sure you subscribe to the channel, ring the bell for when we put these updates out on the internet. And if you want the information faster, join the 365 Ohana. We send these out as emails as well. So with that, we will say aloha and happy fall and Halloween, and we'll see you guys in November.
Great.
Aloha.
See you guys. Aloha.